Is the weekly high to bull signal failing? Let's find out. Welcome to this week's Bitcoin price action analysis. My name is Josep Capó and I am a trader and an author for the Brooks Trading Course website. As every week, let's dissect the price action from the weekly and daily charts of Bitcoin using the Al Brooks methodology. First, we are going to discuss the gaps. The first gap that we can see is that there is an open bear body gap between the close of this bear bar that after the bear breakout, it created a pullback, a bear flag, and then there was a subsequent bear breakout. When there was a test of this lowest close of the bear flag, the bulls couldn't close that bear body gap. And that gave us strength for this subsequent bear leg. However, bulls did close a breakout point gap between the low before the pullback started and the next breakout. And the test, during the test of the bulls of this breakout point, this breakout point gap was closed, meaning that every bull that bought one tick below or at the low of this bear flag could exit at least break even. If the bulls that bought the low of this bear flag did scaled into lower while the price was going down, then they could exit by winning in the lowest entry and break even on the first entry. That means that if any bull is aware of that and the price just break down this lower low again, then they will be more prone to buy since they know that the downside is limited. The downside potential is limited and they are likely going to at least make money if they scale in or if they are able to scale in lower, and they will be not as scared of buying during the bear trend since they know that they will likely have a chance of exiting their trade break even. Then we can discuss a micro gap. There is a micro gap open, which is between the low of this bear bar. A micro gap, it is a 3-bar pattern, and they give us a more shorter term direction, more shorter term insights. In this case, these bear bars, the 3-bar pattern is this one. That there is a gap between the low of this bear bar, this first 3 candlestick pattern bear bar, and the high of this, the 3rd bar high. Then because the 3rd bar is not a strong bear bar and it is a bull bar, this micro gap is considered weak and more prone to be closed. If this were a strong bear bar, then this micro gap will be strong, making the downside more likely rather than the close of the gap. Finally, we are going to discuss more shorter term gaps like the open of bars. In this case, the open of this bull bar that closed above the open of this bear bar is kind of taking control of this range, and now bulls have the control at the open of this bull bar. Then bulls were trying to close above the bear bar open of this bear's bar open here, but now they couldn't yet, and bears defended this control, this gap. That's good for the bears because as long as bulls cannot close above this bear open, the open of this low one bear bar, then the likelihood of these gaps closing is not high. What happens after bears defended this level? Well, maybe now it's time to test downwards, right? Bulls may in the next week they may try uh, to go above here and close above. That will increase the chance of testing the low of this bear bar and closing the micro gap. But so far, if this bear bar closes like this, remember that this analysis is done on Saturday and there is 1 day remaining. But for example, in the Bitcoin ETF that trades 5 days a week, there was a closure of a bear bar on Friday. So bears will try to test this open of this high to bull signal. Pairs have been losing momentum. That means that the time spent to reach the height of the bear swings takes longer. Like there is a strong bear breakout here, then a pullback that there is a duration of this pullback, and now there is another bear breakout. But the size of this bear breakout is smaller than the size of this one, and then the price took a lot of time here before doing the subsequent bear breakout, which means that there is more time needed for the doing another bear breakout, and the bear breakout so far has been smaller, and that's a loss of momentum. It takes more time to conquer less territory, and that's a hint that the price action for the bears are losing their strength. That's a hint that a bull leg might be underway. We have been discussing a two bear leg structure. Market move in two legs moves all the time. So we are always assessing some kind of two leg structure. And the bears did one leg down here. And now they are doing, or they did another leg down. They didn't reach the same high yet of this first bear leg down. So there are some bears that they want more, they want to go lower, but the market does not do always the full size for second legs. So at some point after the price going sideways, there is a moment where traders forget what's on the left and they are just trading the new price structure. So at some point, traders do not expect the market to reach a measured move based upon the height of the first bear leg. Price action traders, we are more flexible with any kind of pattern. As Albrook says, close is close enough. So I consider this two bear leg structure to be completed, and after a two bear leg structure and a loss of bear momentum, I expect a bull leg starting. That's the highest probability outcome. Now, there is always 20 to 30% probability for a surprise, which is quite a lot, honestly. So if there is a bear breakout, would surprise. But if there is a bear breakout after this kind of a structure, then the most likely odd scenario is that there will be another leg in the direction of this surprise. But that's it. That scenario is far away from now, and therefore we are not going to discuss that. The bears, they want a measured move down based upon the height of this bull leg and going towards the $50,000 area. They see here a low one, pull back, then low two. A low two is always some kind of double top. It doesn't matter if there is a reset on the counting because there was a new low here below this low. As I just have said, we are very flexible. We see that there is a double top, and bears, what they want, it is a bear trend resumption down. As we have said, there was the closure of the bulls could not yet conquer the open of this low one open, and bears defended that. So maybe what's truly underway, it is a test of the open of this bull bar, right? This is a high to bull bar, and bulls are now trading by buying below the high of this low high to bull bar. Bears, by closing a bear bar here, they are going to try to test the open of this bear bar. So they are now going to try to test the $60,000 area. Bulls on their side, they want that this low to signal fails, and if the low to signal fails, and as I have said before, there is a closure, a bar closure above this bear open, then the likelihood of the this weak bear micro gap to be closed will be higher. But so far, bulls are not looking as strong yet. They did closed here a bull bar. They continue to do bull breakouts, but there is not a huge strength. Now, if bulls can now have a trigger of the low too, and then an outside up bar closing around its high, then that will mean that bears are failing, and hence that this bull bar will close, and possibly there will be a test of this high or the open of this bear bar, which is the area that so far bears are controlling. If I were a bull that bought the high to bull signal bar, I won't like this kind of price action, and maybe I would wait for another signal. Maybe I will be disappointed and will exit my bull position, especially if there is a closure below the open of a previous bull bar like this one. So let's see how these weeks close. I will wait for the weekly bear close before determining what to do, because there is still one day remaining, and the aspect of this current good looking low to signal bar is going to affect the decision making for both bulls and bears. Remember that I have been saying that this high to bull signal was low probability at the time, but there was a lot or good potential to test the major lower high around or above the $80,000 level. So now the chances increased here with this bull bar, the close above the previous bars, that the bulls were going to test these prices. Now they are testing the prices, but they are failing. So there is no high probability trade for the bulls here. And the bulls, what they need is, or what they want, it is a reversal up and follow through. So they want breakouts and follow through for having high probability of testing here, or even if the price moves fast and strongly on the upside, they will bet for another second leg up, testing this higher level. So for high probability trades, there is just patience to be cultivated, and there is no problem for professional traders in waiting. They are not in a hurry, and if they feel in a hurry, it is when they see that there is momentum in the direction that they want to trade, and hurry means high probability when one has built intuitively strong price action principles. Now we are going to discuss the daily chart, which is very interesting as we have discussed it last week. But before that, all we do here in our channel, in our website, it is for you to learn price action. We want you to learn price action to take decisions independently. We do not believe in copying other traders. We don't believe into taking ideas from others to take your own decisions. What we believe is that you and anyone can learn this craft and create their own trading system. The Brooks Trading Course is the most impressive source of information on price action trading available, and you will get a lot of ideas for building your final trading system. As many of you know, I hold a master's in financial markets. I have learned many trading methodologies. I have learned from market wizards. I have studied market wizards strategies. And the Brooks trading course, I promise, it covers almost any technical way to trade, and it works for any market and all time frames. I day trade futures, I swing trade stocks, crypto, and I do income trading in the option markets using exclusively Brooks price action setups. The trading course is extremely cheap, and the resources available for you to becoming a price action or a professional trader are vast. Within the same Brooks Trading Course website, the Brooks Trading Course YouTube channel and Discord channels, you will find a huge community of price action students and price action professionals, and you won't have to look for external to becoming a professional price action trader. So what are you waiting for? There is a 30-day guarantee, money back, no questions asked. So you do not have any excuse to do not join us. And now, finally, let's discuss the daily chart. As we have done in the weekly chart, we are going to first watch the gaps on the chart. We can see that there are breakout points. There is a breakout point gap here open. An example of a 3-bar pattern micro gap that is strong. So this was meant to hold on the first test. And now more into the July's price action, where we have one bull leg and now we have another second bull leg. What we are seeing here is that the bulls are still keeping control on this low, or this open of this bull bar. It was defended here when bears tried to reverse down, and then bears closed a breakout point gap here when there was a breakout, and last breakout there was also a bull breakout here, and bears closed the breakout point gaps, not only the breakout points gap but also the body gaps here, right? More shorter term, there is this bull bar that is the breakout bar, that the open of this bull bar, it is a shorter term gap, and it was closed on this bear breakout bar. There's a bear breakout bar, but since we are going doing higher lows and higher highs, we are considering this a reversal. Like the breakout during a bull trend is a breakout of this bear bar that closed this bull gap with the open. So now bears are testing the lower boundaries, like these lows, and presumably what they will do, it is to test again this bull gap, because bears have closed the nearest bull gaps, the short-term terms gaps. They have tested the bodies of the bull, these bull bodies. And the reason we are assessing gaps all the time, bar by bar, it is because they give us a clue of what is going to be tested next. We cannot assess price action using gaps in isolation. It is very critical to understand the direction the market is going and whether it is accelerating or not, and the path or the rhythm of this acceleration, to understand the price action as well as the price action structures. So we use all the elements in a holistic way. Beginners, the best way to learn it is to take these concepts in isolation and practice to find them. They take the concepts one by one, and when they are able to identify well, and they have seen hundreds of examples of each concept, then they are naturally going to interrelate them. And finally, when you have a good understanding of every concept, your focus as a student, it is to connect them well. So, last week during the report, we have been discussing the breakout mode pattern that was near the exponential moving average. When there is tight price action near the exponential moving average, the price is likely going to move away from the moving average and start a swing in either direction, because the breakout mode pattern, it is a 50-50 pattern. This breakout mode pattern, this tight trading range, has been biased on the upside because it created higher highs and higher lows. But during a breakout mode pattern, the risk of a breakout happening is high. So traders should avoid buying low and selling high. And the best thing to do, it is to wait for a breakout with follow through. So there are many bulls that know they want to buy because they see a bull channel and they are at the lower bull trend line and they want to see a bull reversal. But the best thing you can do, it is to wait for a bear reversal failure. As we have said, there is a bear breakout here, and now this is a bear follow through. So you need at least to close above the open of the follow through bar. In that case, the thesis of the bears will be threatened, and therefore there will be an increased chance of either more sideways action or a bull breakout. Bulls also can't wait for a bull breakout of the bull channel plus follow through. Still, now, currently, the setup that is in place, it is on the bear side, because there is, as we have said several times, a bear breakout here. This bear bar breaks below this inside bar, and then there is a bear follow through. The price is turning down from a wedge top from the channel, from the top of the bull channel, and bulls failed repeatedly to create value above the previous high. So it is a third failure of the bull trend continuation or a bull breakout, and now the price, normally after a third or three attempts or two or three attempts of doing something, they give up and there is a test on the other side. So now the bears, what they want, it is to test the gaps of these bull bars, so the open of these bull bars. So that is the immediate action expected by the bears. After a bear breakout plus follow through, they have a high probability of at least a small second leg sideways to down. So as long as bulls cannot close above the follow through, the bear follow through bar, as long as they cannot close above here, the chances are that even if there is a reversal, there will be a test of the lows of this bear leg, this small bear leg pattern that is currently unfolding. Now, since there is a bear reversal and follow through, and bulls have failed repeatedly, and there is a high chance that the price will test at least the $62,000 level where all these bulls were defending previously. And because this at the end it is a breakout mode, and in breakout modes we are betting on breakouts and not on reversals above and below, because the risk of breakout is high. So bears have potential for a swing down, The ultimate goal is at least to get to the low, to the open of this bull bar or the low of this bull leg. Considerations to be taken by the bears is that currently there is no any bear microgap. The market is not yet always in short, but another bear bar with similar size of these two bear bars will put the market always in short and good situations for an always in flip trade. So if bears uh, can achieve to do another bear bar or two small bear bars in this sequence, they will be likely selling a pullback. So since the market is not yet always in short, the chances that the bulls can can come here above the bear opens of the previous bars and close above it are higher. So the probability of a bear swing, it is still not high probability, but the potential is high. And this is another crucial concept we always discuss in Brooks price action, that whenever you have a high probability trade, you have a bad risk reward relationship. And whenever you have a low probability trade, you are going for a very good risk and reward profile. So bears scalpers that are taking this trade after a bad breakout plus follow through, they are doing it with a small position size with just a piece of what they can deploy. And they will add more if bears are able to put the market always in short. And if there is an always in short flip, then they will also bet on the pullback, that the pullback will fail. And this is all I have for you today. I hope you enjoyed watching the video. If you enjoyed, please like and subscribe to the channel. And I will answer your message in the comment section.